Hey everybody, what's up? It's Booksy. Today is Tuesday, October 22nd, coming with you with an update video, shorter update video, kind of a weekly outlook, and recapping a little bit what happened on Monday this week. I'm going to be going from kind of small to large this week just to kind of get a big picture analysis going because it's been a while since I've done a short form update video. I want to make sure that we take a look at kind of everything that's happened and that way this outlook makes a little bit more sense. So I'm going to kind of zoom out as we go. So what I'm really wanting to see here in this build out is what I call like an ascending accumulation. The low volume here is fine as long as we get a push back above ultimately the 460s, and you can see that we're quite a way from that on AMC. We are, however, making good strides. We push back up here above the 424 level. We left a little bit of a penny gap below. We got a slight double bottom, I believe, yesterday going into today at 424. The gap itself is very, very minor. It's like 22 to 23 cents. Arguably, we could have gotten there and not broken through any kind of major support trend coming up here. I think longer term, meaning the next few days, sorry, not super long term, shorter term, I should say, we could still see it come back down later and break this kind of ice level here that's kind of rising support. Though I don't really want that to happen, it certainly could happen if this forms out into kind of a secondary wave here. So we have this push up, which broke out from the main kind of creek, I would call it. Usually you see that double M shape 1, 2 here. And of course you see the smaller 1, 2 down here in the trough, the valley of this wave right here. That's where the breakout level is. Once you do that, typically you're going to come back down and check that breakout. Now, I mentioned a little bit on stream last few days that I didn't think it really came high enough. And this is kind of odd because normally you don't want that kind of distributive action. You don't want it coming too high before it's ready. And in this case, it didn't really push any resistances beyond that 441. But if it's going to break out, at some point it needs to kind of push back up through these resistances up here. I've got marked on the chart that above 440 is a stronger confirmation. And we'll kind of get into that as we look at the bigger picture a little bit more. But for now, it's suffice to say that if you look at where those shelves are, one's at 460, one's at 440, and then one's kind of at 420 where we are, like 20-cent intervals. And so right now we're kind of coming back down, checking that creek area. Again, I might have expected it to go low here and go ahead and get that gap fill and check that rising trend there. It didn't do it yet. So again, it could happen in a secondary wave action here. When that occurs, and it probably will occur this week, you're going to have an opportunity to have an M cross here. So you can see on the chart, I've got two possibilities going forward. The reason for this is that when we push this resistance up, we generate a higher creek, right? And I'm using on the big picture, this big red line you see coming down, like a massive arc coming down. And again, this is going to be kind of hopefully a little bit clearer when we go and look at the big picture. But essentially that arc came all the way down through here. I think we broke it already on the 16th, but when you do that, you're essentially widening that creek, so it raises up. So another way to illustrate this would be sort of like this, right? So you've got almost like competing markers here, you can see, and we got to get through this little pocket right here in order to break out. Sensibly, it makes sense. You're just really going up, retesting the highs at 441, and then pushing above that. And until that happens, you don't really have strong confirmation here. In terms of volume, I'm not particularly worried about it. You know, we came down low. We pushed beneath the bottommost support that we had around that 414 area, and we rebounded. We found support again right above it. We did a nice little jump back above, tested that support, pushed back out, jumped the creek. So far, so good. The reason that I was saying ascending accumulation is because you want to see that kind of lower volume push up. You don't want to see it look like what happened back in I believe it was May going into June here. You don't really want to see this high volatility nonsense with extremely high volume peaks and then trading very, very low in a channel. That's more like a bear flag. If you go back and look at that, that's an example of one that ultimately breaks down. And obviously we don't want to see something that tops off either and drops in the event that we do break this quote-unquote ice level and we do return back low, I've got estimations that you probably come down to that 380 area during earnings if you do break a new low. But right now, I'm hoping for this ascending accumulation model, which is essentially just a bunch of creek jumps. You just push up, let it go, push up, let it go, push up, let it go. But instead of making new lows, you're making higher lows as you go. I think once we get back above the 440s, we're going to start seeing some really strong pushes up to the 460, 490 area, and then beyond. Big picture-wise on AMC, this is where things really kind of click and come together, hopefully. When we look at this big picture, I've done two different analyses that I think are really important. One is a comparison to where we were in 2020. I'm not going to do that right here on this particular short video, but I did a side-by-side comparison with this area, and I also did a side-by-side comparison with this area because both have a very similar build out into bottoms, into reactionary bottoms. Some of the differences in these two have to do with what comes next, but in both cases you get a big push up in the end, if as long as it does certain things, right? You have to get certain confirmations. You may be questioning, if you haven't followed for a while and you're just kind of jumping in and you're like, oh, a short video, it's not a stream. Why in the world I don't want to go above 13s? I have a long-standing theory that this is a little bit more like what we saw in 2020, where we're forming a bottom, and this is an auto reaction and a big range setup. So the range was set up back here in this preliminary support. We had two preliminary supports coming down, and we get that early supply drop around 1130, and I'm thinking that area from about 1130 up to 1388 is the top of the range. Very similar to what happened back in 2020. And we haven't tested it more than once, and we also haven't made anything that looks like a phase B top. This is just a gigantic auto reaction to this massive drop. So I'm expecting a possible phase B top, and then after a phase B top, it could go on for quite a while. However, in this particular case, things are getting very, very compressed. We're running out of time, if you will, in the range. And just doing the comparison, that's where these arcs come from, these trajectories, I should say. Really, the suggestion here is that you would hit 1388 and then come back down very, very low to the twos before leaving. That could be mitigated. That could change if you hit what's called an LPS, a last point of support, and it does not go down for a spring. So you'd have like an auto reaction, a phase B top, and then it doesn't go down for a spring. This area then becomes a reaccumulation, right, after a rise and then a descent. And so this would have to be looked at as a potential reaccumulation between two potential peaks here. In any case, it doesn't really matter whether you think it's going to continue or not. That's sort of debatable, or if you think it's going to back up to like 6 and then go versus coming all the way back down. What I've got drawn out here is what is proportionally correct. I've done dozens of hours on this already, and I don't want to do it again right now, but this is essentially like the outlook, okay? You could have an early distribution around 6. So this is the main creek that we've basically dropped at this point. We've jumped it. I think it's done. I think we've already hopped it. I rose it up in order to kind of illustrate like, all right, it's now higher. You can jump the next one. But really, I think it was jumped quite a ways back already. And it coincided with this jump that happened on the 13th. And that's where IWM made its leap and then started advancing. And instead, AMC made a leap and then started coming back down. This is very similar to what happened in 2020 when the market kind of started advancing without AMC. This was kind of in this region right here. And AMC instead goes down for a spring. And there's reactionary things that happen, at different points. Again, this comparison is a really, really powerful one, especially given the fact that it's setting up along the same parallels coming down. I don't have those on the chart right now, but it's essentially this bottom. And if you were to copy and paste this and kind of walk through here, you see that this is really similar in terms of levels, going down, meeting the same levels, the same intervals, essentially. And this applies for everything all the way through, including like this middle area where we caught here in 2020 in July to where we caught here in 2020 in July. and also even down to the gap, right where we gapped up back in 2020. It's the same region we gapped up here. And of course, this parallel goes all the way back to early in the stock's history. Really like beginning of the stock's history, one of the first downtrends created here on these in this first wave cross that was created way back in 2014. So this is not something that I take very lightly. In addition to that, when I did the comparison to 2022, that particular iterative move down where you're getting a kind of a copy paste iteration to a spring, we look really similar right now to that area, and that was where this arc comes from and some of these other trajectories come from. So here's the gist of it, okay? Without going into further detail about it, I'm trying to keep this very brief. I think that there's three areas that are really in contention here. One is $6 up to about $6.70, okay? This trajectory matches a lot of things. It matches the initial breakdown here on the wave when it came low and then came back up. This is where the M cross happens on the second cat ear. It's the smaller wave of the bigger wave here. You can see a peak, valley, peak, and then on that second peak, there's actually a peak, valley, peak. That's the wave that ultimately often defines kind of a mid-zone for a potential move. When we did the PNF for this, which is the point and figure count, we found that it averaged about 16, which is very high. However, that breaks out, right? So that's basically like a cause that's built up, and it would break out from the top here ultimately and go back to near where that gap was at 1690. That was pretty darn close. It's not impossible that happens, but it would have to push this resistance. However, everything else about the comparisons we did not line up with that. What did line up were another system of parallels right here going back up. This matched, again, the same parallels that occurred in 2020 on that secondary push up to the top. Yeah, this was almost anemic looking as an auto reaction. My expectation is that the secondary reaction, if it does happen, would be very similar, very quick. Maybe a little bit more time spent in the top, but not much. So it'd also be very quick up, quick back down. And the build out here doesn't suggest that it would go to 16. It suggests you go to like the 1388s, okay? As things are going forward, we're taking that into consideration that there's a larger point and figure count as long as this is a spring, and that means it has to come up in SOS at 6. Well, the good news is that, yeah, we have a lot coinciding with that. There's a lot of support there that suggests that that could happen as long as we get the right check boxes here and we don't break down. A lot of folks are probably going to look at this and say, well, it's failing to make those jumps and it's been pushing down. Therefore, it looks more like maybe an LSPY or a bear flag, and then it would drop. I would suggest to you that the 2022 model is pretty much identical, that push down that happened going into March 2022. And that push down has a very similar directed arc downward, almost like a beak is what we call it. And it's very, very similar in the nature that it's distributing at the top. That's a given because it's obviously selling off on each of these tops, making lower highs each time, and it's coming down. But in the end, if it crosses the creek and it rebounds, which is what's happening right now, you should get a major reaction back to the upside. In terms of buying volume, you're not going to see a huge amount of volume come in until that reaction's done. I think you need to come back up and get support on 440s and 460s. And then I think you're going to get a decent volume until the top. And this is ultimately where you would see the action happen. Now, I'm estimating on this chart, maybe it happens around elections. Maybe it happens around earnings because that would coincide with that. Some folks are going to say, well, I don't think it's going to move until then. Other folks are going to say, yeah, I think it's possible. It sets up. A lot of this has to do with your perception of what the operators may want to do. In some ways, if you're going to distribute or you're going to run, it almost makes more sense to come up high before those big key moments, because if you're going to distribute, meaning you're going to sell off, you'd probably want to go ahead and pump up to a high that's above 540. And the reason I say that is because majority of folks that entered this play entered it back here on this move up, probably coming after March Q2 and then that dip. We see that 13F filings were largely back here posted on May 15th, which is an interesting date. I don't want to get any more into that, but it coincides with GME, AMC, and IWM, which is the small caps. But a lot of that rotation happened here. So my best estimation, even though we don't know what necessarily that price average is that majority of folks would probably want to distribute off the top. So it would almost make more sense to go ahead and run it up. If the news is not what you expect, then you can sell it down. You're already in the selling mode. You've already got FOMO going into it. That's my thought. Then you're selling the news if the news is, something that you need to sell. So in this case, that would make sense. However, there's going to be a lot of people that disagree and say, I don't think so. It's going to go nowhere until elections, nowhere until earnings. That's fine too. We've seen both, okay? We've seen run-ups like what happened in August 2022. We ran up into earnings, then we had a big drop, and then we continued. We've seen that before. It's not like unusual that it could be a halfway point. It's been both. Other times it's been before a drop, before the rally. I mean, that's kind of what happened back here. And then, there's times where we just kind of coast through earnings and we're waiting for some kind of news to drive the stock. All of that to say, as much as I would agree that, it's possible, I think that it's already kind of making motions out here and it's really starting to advance. And if we can get that early push, I don't particularly care that earnings and elections are around the corner, except to say, those are going to be anchored interest points perhaps. And so I do think it's possible we run up before. And if we don't, then yes, probably where we're at right now, maybe in the 450s. That would be roughly where I maybe would estimate if we're going to continue the path that we're on now or dropping back low. But suffice to say, we're in the kind of the bottom here of the bottoms. And I think that 460 is a way stronger support. It's acted as support more often for us than any other support in this range. So for us, I think getting back above 460 is absolutely critical. And once that happens, I think you're going to get a pretty big rally. There's not much to stop you all the way back up to the top at the SOS. And that's exactly what you would expect if this is indeed a spring kind of motion, that you'd get a rally back to the top. Now, from that point forward, the stopping points are $6, $9, and then I think $13.88. Based on the 2020 comparison, it would go to $13.88. Based on what we see in March 2022, probably only go to like $9. It's a bit confusing, right? And it has to do with certain trajectories building out, certain things getting built out. I don't think that there's a whole lot more to talk about other than just those are potential places that you could stop, okay? So you'd want to be careful when you're coming up here because, yes, it could stop as early as 650s. It could stop as early as 9s. And some people might say, well, that's not really good TA then if you don't know if it's going to stop. I don't think so. I think that having this in mind, that there's a potential for a massive move here, is important. But I think you also need to know that some things in the market are just not sure. You're not sure about it. And if the desire for the operator is ultimately to come back down, any of those points offers a really good anchoring. If you look at, for example, like 650, and then you look at the 50-50 sell-off from there back down through 445, which is kind of where we're sitting right now. That's one of those supports. It takes you right back down to the creek. It takes you right back down to this long-standing creek and the gap fill. It's an easy double flush. Same thing applies to pushing back up to, let's say, $9. We got a 50-50 right to $9 is right where it should be. When you look back through here and you do a 50-50 around like Liquid Center, for example, also takes you right down to that gap level. If you go down even further, you can see why this matters, because each of these levels that you're anchoring around is giving you pretty logical double flushes, including the one all the way to 13. And this is the one that I think is going to be the most disagreeable for folks, that they think, oh, I can't do that. I can't go all the way up there and then come back down. That's too much. I disagree. I think it totally could. I don't necessarily think it will. I don't think it's the highest probability of them all, but could it? Yeah. Yeah, it could. And the 50-50 goes right through this creek that was established early on in our channel, which is this yellow line. And that's the halfway point, and it's the halfway point on the rise. It's a pretty clear intersection right here, and it's right at like 515. So that would be a logical place to come back to on a 50% retrace to kind of try to catch that creek and then potentially push down further. And frankly, it lines up. We talked about these parallels. It lines up really well with the parallel structure. And I know that people are going to be like, no, it's not coming down to 2. It's not coming down to 2. The same thing happened in 2020. It went up. It did several push-ups, 1, 2, 3 times here, trying to advance, and it failed. And ultimately, like, this breakdown that occurs from this top to the bottom is a halfway point breakdown. It comes all the way back through the range, right, in waves down. And yeah, it took a longer time. I get that. This is also around elections right here, so I get that as well. Kind of seems like, oh, it's the timing's a little off. Maybe things like that or a little different. I get it, but this is a 50-50 swing, and it did come all the way back down to the floor. It filled the gap, bounced on earnings and elections, and then came way back down. So when we look at this big picture, you might say, it's not possible. It's not possible. No, it's definitely possible. And the other thing is, like, people are going to say, well, the volume here was too high. It's too high. It's too big of a reaction right there. I think we forget that although that's true and it's easier to compare it to maybe this kind of a move, it's not the same. This move in January broke out of that creek. It broke out of that creek absolutely 100% without a shadow of doubt. It jumped the creek here. It advanced, and then it comes back down and checks it. You can see it visually right here. We did not do that here. We did not advance beyond that creek. It's still in contention. And you can visually see, like, look at where that $9 mark is. It's like right on top of that, It's not at all the same in terms of the advancement level. So what's the deal with the volume then? Well, go back to 2020 and get rid of that big move. I'm just looking at volume without that final move. Notice that there's heavy volume reactions. They're actually heavier than any kind of singular volume reaction we received even during the election season over here in November. These are the auto reaction moves. We get this big push to go all the way back to the top of the range here, right? We're going back to check that supply drop that happened. And that's what happens here. And all of this together is quite a huge amount of volume. And then it just goes to dead volume, right? Until the second peak, and it's still dead volume again. This is an elevated volume level, but ultimately, like, this is all high volume compared to what happens after until the very end, and then you finally get that big volume buy-in right here. So, like, I know that there's some contention about that because you're like, well, it can't be the same. It can't be the same. Maybe it's just that high of a volume push, right? And there's a lot more going on here, but ultimately, this is what's backing up to check, and then we go back to super low volume again. So I still am going to treat it like an auto reaction and then wait and see what happens. And I don't think it's impossible that this is a huge range build out, and that's intentional. That doesn't necessarily mean you're going to come back and make a new low. Doesn't mean you couldn't have an LPS and just fill a gap and go. Doesn't even mean that that gap has to be filled. But what it does mean is that you're working a range, and that range is quite large. And there's definitely an area here below 289. There's another area right here between about 350 and 4 that just haven't been traded very much in this range. So do I think the operator might want to come back down and get those levels? Yeah. Do I think that they might want to pump it up and sell off before doing that? Yeah. And that's normal in a large range. So that's kind of where I'm at right now. And so when we go back to the small picture, hopefully that gives you some light and lets you see what's going on. I don't think any of this happens in a vacuum. I don't think that it's impossible. I think that there's a lot of contention that people have about news and other things. They say, whoa, AMC's doing better. It can't possibly come back down. It's like, well, we were just there not 6 months ago. This is not that far-fetched. Has some things changed? Yeah, some things have changed. Has the general outlook of the company changed from back here? No. The powers that be, the folks that trade this on a large scale with 20, 30 million shares, they're not dumb. Like, they're aware of good news coming in back here that's going to happen with the debt restructure. The overall outlook has really not changed long term. So if the goal is to accumulate across a massive range, that's what's going to happen, right? I don't think that there's anything that's been groundbreaking news that's changed the 3-year plan, for example, or 4-year plan for a lot of these operators. That's it, So yeah, there's some things we're just not going to know. But then when we look at this short term, it's like, yeah, we're in a really good spot right now. We just have to make the right check boxes. I go to IWM, and I'm going to kind of dance around a couple charts here on IWM. I may have to bring up another one here. And I'm not going to spend too much time on this, but I'm going to use this as kind of a sandwich between IWM and a short GME bit. So on IWM, I did a new chart, and I'm going to look at this one instead. And during this chart, you might say, oh, that was really confusing, Booksy. Well, yes and no. What we determined on the previous one was that there was something of an iterative move going on, meaning like it was sort of a copy paste. You had this wide S-curve coming up with a creek jump in the middle right here, and then you have a push up that fails to continue on that S-curve right there. The S-curve going up, and it pushed up, but it didn't hold it, and it dropped back low. You're actually getting the exact same thing right now. And what this did is it allowed me to estimate that we probably were going to see something similar to what we saw back in July. We even hit the similar level. We're probably going to drop off and then start a new S-curve. Now, does this mean that it's going to end badly if it can't break out above 225? It could be. If you continue to try to make push-ups and it's failing, this just turns into a very high volume top, doesn't it? You can see there's a hike in volume, and that certainly could pose a threat to some folks if they think it's going to be distributive. You'd be like, oh crap, it's going to just distribute. A lot of times iterations that move upward like that, if they lose volume, you're typically going to see that, okay, they're losing volume, they're going to weaken, and eventually they're going to capitulate. That's true, but at the same time, the build out here doesn't really look like something that's overly negative. And so after looking at that from an iteration standpoint, kind of helped explain why we're not continuing these S-curves. We're kind of breaking through, resetting, breaking through. I think we're going to reset again, and then we'll see if we break. When I went to the big picture, this is where we did a lot of analysis on waveform, and we found pretty successfully like the macro wave. Like it's a very straightforward, it's basically what you would expect, about a 4-year cycle. It's not a big deal. That's something that I think a lot of folks would look at. The peaks are the peaks and the valleys are the valleys. And we're still in a peaking period, and generally the peaks go well beyond the top of this wave. They go almost to the halfway point before they start turning down, sometimes a little bit earlier. But our expectation would be that this would continue to peak going into potentially spring of next year, at latest maybe summer of next year, and then after that point drop. When we did the measurement on it, we went back and looked at a few different examples. We found that there's a macro S-curve that could be building out that leads to March 2025, basically Q2 2025. And I think that when we look at the big picture, it does make a lot of sense. We did a ton of measurements on this, and it's very fascinating because even like in the peaks hitting those markers, they hit the markers on like these perfect spots. I mean, it's great stuff. It was a cool chart that we did, and I found it to be very enjoyable and very accurate and really interesting. And so what I came to conclusion of at the end of that was that if this continues, yes, you could have it technically come down to 213 and it could still be bullish. It seems a little odd. There is a gap there, and you might think, well, it can't come down that low, right? Not really. There's an M cross that happened. You can see the push up, the pullback, and then the 1-2. And this 1-2 could be a double top kind of effort, 1-2. You see the volume dropping off. It's definitely not impossible that this could come down as low as 213 and still technically hold and reset. It'd be very similar to what happened here when this pushed up from 200 all the way to 227 and then came all the way back down to 200 again. It was like almost a full throwback, right? And that's, something we look at and we say, well, it kind of was weak. It came lower than that point. Yeah, I mean, there's problems with it, but ultimately it recaptured, retested that trend, retested that macro creek coming down here, and then it pushed off again. It's trying again. So I think small caps are due. They haven't hit all-time highs again. They're lagging way behind. Typically, they're part of that rotation of liquidity, and with rate cuts come in, usually small caps do very well. Some of this is priced in, yes, but we know that should mean that if they're going to participate in growth and their earnings are decent, then we should be seeing earnings are decent going forward. We should be seeing small caps catch up, and they just haven't yet. So we're kind of waiting for that move, and I think a lot of this is just shakeouts before maybe potentially like a bigger rally. And I do believe it's coming. That's my opinion about it. It's been my opinion for a while that it would come up here and then resettle and then push again. It's taking a little longer than expected, but it's happening. And right now I'm looking at this. I see two potential major places for stopping going forward. One is 219. We're approaching that now. That's this level right here. This is like a hot zone level. It's a golden retracement. Definitely possible it doesn't go below that. There's a couple other things with that I don't want to get into, but it's essentially like a shorter creek retest right here. And then we could go down as low as 216 and then 213, and that would also be fine. But that would have to be something going into, like this would be a longer term breakdown going into potentially like elections right here. Perhaps the position of uncertainty. Interesting about that, if it does go down to 213, it breaks this longer standing trend, but it would be a great opportunity for like a bear fake if that's the case going into elections, and or if it's bearish and the market doesn't like, whatever happens, then we can go ahead and just hook and continue down to like 200 again, which would be the next area that I would expect to go to. So there's some problems with that if it does come here, but it's not like out of left field problems. It's things that are easy to anticipate. I would prefer if it stayed above 219. I think that would be a little stronger, and it would have a good launching board for potential moves going into the end of the year rallies. That's fine, but I don't really worry if it comes down to 213, okay? So that in light of that, you can see why I'm kind of not certain whether we see certain advancements earlier or we do need to come down lower for things like AMC and GME, which are small cap entities. Now, GME is a very simple, easy to read chart at this point because we have so much information. I don't want to go too crazy on GME. It's already been 30 minutes on this video. I've talked about GME quite a bit as an iterative wedge, meaning that it's basically just copying the same thing 1, 2, 3 times here in terms of like how it's pushing up to the top and then how it's distributing on this top creek coming down and then ultimately finding a bottom on this red creek coming up. So you got a blue line and a red line right there. It's doing this while wrapping around a historic creek line or a trend line. These parallels coming down, all 4 of these parallels are checked on the way up. We get this kind of massive double top here, and then we've been coasting along the topmost parallel coming down. It does look like a giant iteration of the same exact thing we already experienced here, albeit on a smaller scale, like a breakout of a big breakout, right? If it holds that yellow line, you can see why I'm favoring like a pushback to 45s, maybe even way higher. But just like AMC, I'm kind of not sure if it's going to distribute back down first into January. I'm also not 100% sure it's going to go very far, even if it did break out. However, if you look at this as just a wedge, super simple structure, it's also wedging underneath like a historic buy and sell zone at 24. This is interesting because we were basically hugging this at every earnings for like a year and a half. And this is also when Ryan Cohen decided to do share offerings. As soon as it passed above 24 both times, he did offerings. That level, the 2310, is kind of my key breakout. It's the bottommost of that area. You can see it's distributed above that, and it's held above that as well in the past. I think if we get above that area, we're good to go. We're going to see a big push up to the 30s. We should go back and retest $30, $34, these upper levels that we haven't checked in a long time, and really kind of push back out of here. We did the same thing on the big picture, albeit it happened very fast. We did the same thing when we backed all the way up to these highs from 2021. We went back through all these levels and checked them all, right? And it's interesting, nonetheless, to see this in light of AMC and IWM and consider the possibilities here. At the end of the day, I think it's a pretty big wedge that's been pushing. Yeah, it's a little bit more of a curve than I've got it drawn at this point, but it's essentially just a simple iterative wedging action. It's doing like basically the exact same thing over and over and over again. And so locally, when we look at that, it is possible to see this as like, oh, well, what happens if it breaks down, right? Number of things. I mean, wedges that break down and then reverse are stronger than wedges that just break out to the upside. But it's hard to know when that happens, right? You have to see like a head fake coming, and then obviously once the head fake happens, like to the downside, for example, and I think it would be around 1860s, because of, again, where we were on August 5th. If that happens, it'd be really difficult for us to sort of see that as a reversal point, except for maybe looking at something like RSI or some other information to give us an idea that it could be reversing. It's not exactly oversold on some of these higher time frames. There's definitely room to come down if that's what the market wants. But another person is going to look at that and say, well, I think it's going to do that and then hook and continue down. And all I can say about that is that it's not impossible that it happens if they have enough sellers, but usually on a macro structure this size, we're going to see some kind of a fake out to the upside if we're going to come down. Like, it's the same thing with AMC. It almost makes no sense to have a P&F, point and figure, built out here that's so high, and then to have so much accumulation that has happened and trading that has happened to not go back up and sell off, even if you were going to be distributive in the end. And I think the same thing applies to AMC or to GME. It just doesn't really make sense to me to pump it high or to just drop it low from where it's at and not take it back up and try to sell again. I find that to be a bit hard to understand. I'm not saying it's impossible. It's just, it seems more logical to me that you would bring it back up to at least 30, this area right here, in order to sell off if you were going to have like an actual distribution and then sell it back down. That all could happen going into elections. Like we're kind of speculating a little bit here. But my thought is that it's not going to do a hook and then just continue to drop down. I do think that if it does something similar, then this is like a large cat ear structure. I think if it does something similar to what we experience on AMC, it could be a push up with a drop back down. You can see that coming back down, I think you'd probably come back to 12s and 13s. Seems kind of ridiculous, but honestly, it's within line from what we've seen. It wouldn't necessarily break any kind of a breakout either. It's just going back to retest this long-standing uptrend, which I don't want to get into too much, but definitely a possibility. Okay, so we're looking at a lot of different options here, but I think I'm favoring a push to the upside to the 30s and 40s before anything else. And then from that point forward, I think we're going to see, because I think this is a wave up, a little mini wave. As long as it breaks, we should get another wave back up. You see the first wave went up to like 47. I think it'll be similar here on this reactionary move. There's no guarantees in the market. We'd have to look at, again, what happens at these levels, just like AMC. You've got certain levels that could cause some problems. You're just going to have to wait and see what happens there on those moves. But there's enough cause there to go. So, it's there for the taking. And I think we're going to take it, and we're going to go ahead and alleviate some of that pressure and push up. So that's it. That's all I got for you today. I tried to keep it short. It's a 40-minute video, but if you guys are following, hopefully that gave you a good recap. I haven't done one in a while. Intraday price action might be a bit boring, here and there, but I would definitely suggest that we're really close to some very pivotal moves, like right here going to 441. On GME, it may not look like we're at on the elevated high, way up here, 10,000 foot view. May not look like we're at a turning point, but when you look back, we just spent a lot of time distributing along this top, and it doesn't take much if we can react here to come back up and break out. We're basically out of it, pretty quick. If we can get back up to that $22 level at some point in the near future, we're essentially out of that major creek. We're onto the secondary one. I think we're in a good place, to really continue and advance beyond. There's no gap here anymore. I need to get rid of that. That was already filled. But to the downside, if it does need to go down again, I'm looking at 1993, something like that, and then that's it. I'm kind of hoping we don't. Kind of hope we make a higher low here again, kind of right where we're at, and then push back out. We will see. That would be a really strong confirmation of some strength to see it come back up and push all the way back up to the 22s. I think would be really, really good for us, and ultimately could signal a pretty major breakout moment that starts a gigantic wave to the upside. So, all right. I hope you guys have a good one, and I will catch you later.